All right, welcome in episode 21 of the Ninja Wealth Exchange here. Got myself and Johnny here, your host. How you doing, Johnny?
Good. How you doing, man?
Good, good. How was your weekend?
It was busy, super busy. I officiated a wedding and then went to a funeral. Just got back. So
Wow. Did showings too?
yours?
Yeah, busy as well. Busy doing showings, writing offers. I think I wrote like 3, 4 offers this weekend.
Nice.
Didn't
Busy's
win
good.
anything. Didn't win anything yet. But that's what we're here to talk about actually today, right? So, we're here in spring, right? Uh, daylight savings today, right? So spring is here,
Mhm.
and so is the market. So, crazy, crazy times again. From what I'm seeing, I don't know about you, but long lines at showings. One showing I was at on Friday, there was literally 20 cars deep just waiting to go through this house. And
Crazy.
yeah, and when we finally got into the house, it was pretty much an open house. There was like, so many buyers there. Everybody standing around with their agents, right? Trying to have a little bit of privacy, trying to negotiate, talk some game plans, right? It
Yeah.
was wild, man. It was wild. So I'm starting to see a lot more of that. What are you seeing in your market?
I'm not quite seeing the same thing, but
Okay.
maybe I'm at a different price point, right? And
Mm.
so I think my thoughts are is that if you're buying in the Twin Cities, anyways, if you're buying somewhere between 350 to 450 ish,
Mhm.
you're seeing lines too, but,
Okay.
if you're buying anything above the 450 range, you're probably not gonna see as many lines.
Right.
Um, our deal, like, one of the listings that I have is at about 535,
Mhm.
and that deal, like, we had like, the all the open houses we did, like, 4 open houses, and all the open houses, there definitely was people there, but we haven't had any offers yet, so,
Mm.
we'll see how it goes.
Yeah. No, it's you know, like you said, it's a good point that depends on your price point as well, right?
Mhm,
Um,
mhm.
if you are kind of in that what is it, the starter home price ranges, right? You may see a lot more buyers there, right?
Mhm.
Versus the kind of the mid range, the move up house range, right?
Yep.
Or even the luxury, right? The high end, the million
Mhm.
dollars plus, whatever your market is. Some markets, $1 million is starter home. So
True.
yeah, it all depends, right? When people ask, how's the market? There's a lot of nuances to it, right? So what do you mean? And of
Yep,
course,
yep.
here on our show, I mean, we talk a lot about investing as well. So an
Mhm,
investment market can be very different as well, right? Whether you're looking to flip or buy rental as well. So those are all very different. And sometimes if you're a flipper, you're competing with regular home buyers, right? Um,
mhm.
so
Absolutely.
it does get pretty challenging, right? Because yeah, especially for a home buyer. If you're a home buyer and you're competing against investors, it can be very challenging because usually investors are very aggressive, right? They
Yep.
they buy cash or like cash, meaning hard money, right?
Mhm.
And yeah, we'll talk a little bit about the benefits of that. But all right, let's get right into the show. So we're not, we're not trying to gatekeep it all here in this show. The purpose of our show is to tell you guys exactly how you build your wealth, how you win, right? And there's a lot of secrets, right, that agents and buyers like to keep to themselves on how they win these bidding wars, right? And
Mhm.
bidding wars are never a fun thing, but you have to be prepared if you want to actually get a house in this type of market, this type of environment, right? um,
Mhm.
so we're going to go through a lot of things, and if you have questions, you want to talk to us one-on-one, you want to hire us to help represent you either on the loan or the agent side. I mean, we are both dual licensed, right? So we can help you
Mhm.
with
Mhm.
that. But yeah, let's get into this. So number one, right? Number one thing that a buyer needs to understand if they want to win these bidding wars, what kind of mindset shift do they need to have?
I mean, so first of all, you gotta look at it from perspective of this is assumption is you're in a bidding war, right? you have to have the assumption that the seller is going to take the highest and best price, or they're going to take the deal with the most certainty, or the deal with the least amount of hassle. And so, sometimes like when buyers come in, they focus a little bit too much on the price, but sometimes it's not. Like if you're asking or if you're giving the sellers what they want, and you have a certainty that you're going to close in a really really quick time span, as well as having the proper finances, or having cash or something like that, you're going to be able to write a better deal than the next one, right? So here's an example, right? So let's say, for example, a seller receives two offers, right? And let's say, for example, they receive a $310,000 FHA loan offer, right? And then they receive a second offer that comes in at 305, which is $5,000 less, but a conventional one with strong finances. And you both have pre-approvals on this, right? The likelihood is that they're gonna take the second offer with conventional loan, because it's gonna feel a little bit less um, complicated, right? A little safer. And that being said, there's a little bit more certainty on that deal.
Hmm. Hmm. Yeah. So, thinking from the seller's perspective, right? I mean, number one, ultimately, if a seller is listing their house on the market, or, putting it up for sale, the goal is to sell the home, right?
Hmm. Hmm.
That's the goal, right? To sell the home. So ultimate goal is to sell successfully. Goal
Hmm.
number two might be, majority of the time, might be get the highest price they can, right? Get the most
Hmm.
profit, right?
Yep.
Now sometimes other goal could be time, right? Time is a factor.
Yep.
Like maybe they got to move quick for whatever reason, right? Or they got to sell fast because they need the money, right? So depending on the motivation, and if you ask the right questions, your agent helps to ask the right questions, you can, figure out what do they really need. And sometimes time on the opposite spectrum, they might need extra time to stay in their property, right?
Absolutely.
And like especially in a crazy market like now, right? Where, oh, I gotta sell and then I'm gonna be homeless. Now I'm a buyer. I'm dealing with the same thing you are as a buyer, right? So now they all of a sudden they shift tables, right? And so if the market's tough, they're gonna want a little bit of time to also go shop and find their home, find their next move, right? And if you're a buyer who is flexible, right? And you have a flexible living situation where you can allow them 2 weeks after closing, a month, usually 2 months max, because if you're buying with a loan, you have to move into your house after 60 days of closing, right? So there's a requirement. So most of the time you can't push this past 2 months. But the key is that you have to put yourself in the seller's shoes and trying to tweak your offer to best, you know, meet what they need to do, right? Um,
Yeah, I actually have an example of that,
okay,
right? We
yeah,
had one of my buyers wanted to buy a house, right? And the sellers asked if they could actually close 2 months out, because they were building a
mhm,
house, right?
mhm,
And so
mhm,
they weren't going to close on the house that they were building until 2 months out. So that being said, we actually had to wait. And this was, during the Christmas season, right? So we
mhm,
had to wait until January 1st before they can close on their house, and then we can close on the house that we're trying to buy from them. And so I definitely think that, if your agent asks the right question, the likelihood is that you'll understand that you could write a better offer simply by,
mhm.
moving out the closing date sometimes.
Right, right. So yeah, definitely. And then like we mentioned, highest price is not always the winning um, factor, right?
Mhm.
And I don't know about you, but a lot of buyers like to ask, "Hey, I lost. Do you know what the winning offer was?" What's the answer to that?
The honest truth is I always ask, right? I
Mm,
always ask the listing agent. They don't always tell.
mhm, mhm,
Sometimes they do. Sometimes they'll say you came in second, they came in over $5,000 over you, they had a conventional loan, no inspection, right?
mhm, mhm,
And so if they tell you, then you can tell your clients, but most of the times they don't. right?
Correct. Yep.
And when they don't tell you, then you just have to say, hey, we won't know until they close.
Yes. Yes. Yeah.
And we will definitely submit our offer in as a secondary while we look for another house, right?
Right.
And if we find another house, that will of course back out, right?
Mhm.
But as we're like when we go, sometimes we have to be a little bit more aggressive. Sometimes we have to know exactly what it is that we want to do. Some buyers, right, are willing to give up the inspection, right?
Mhm. Mhm.
Meaning they're okay with fixing whatever is broken, right? And if you're one of those buyers that you need everything to be fully functional, well then someone's got an advantage over you, right?
Yeah. 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 We'll talk about that a little bit later here as well.
Yep.
So, yeah. So then now let's move on to strength of financing, right? Yeah, that's one of the things that you talked about. Not all sources of funding are looked at the same, right? Like you just mentioned earlier.
Mhm, mhm.
So can you kind of explain to the buyers out there, like what's the hierarchy of financing from a seller's perspective, right?
Yeah. So typically, right, what you'll see is the hierarchy will begin with cash, right? So number one, strongest offer, cash. And of course, you're gonna have to document that cash, right? So be prepared to provide some kind of documentation verifying that you actually have that cash. Cash is king because no financing, no bank guidelines requirements, faster closing, right? No lender delays, no appraisal. Well, usually sometimes there's appraisals, but most of the times, if you come in and you offer cash, it is expected that there's going to be no appraisal, right? So there's no risk if they have the cash in their bank account. If you as a buyer have cash in your bank account, that's number one. Number two, right? Number two is usually going to be a conventional loan. The reason why conventional loans are really good is because they also are a little bit more flexible on the appraisal and have lower requirements when it comes to the property condition, right? In addition to that, conventional is a pretty stable uh, loan type, which most people use, and sellers are going to feel a little safer with using a conventional loan. Third will then be FHA and VA loans, government loans. They're great, and the likelihood, like, so for example, VA loans are 100% financing. The sellers are going to know that you're going to qualify from a VA perspective if you got a pre-approval done already, um, and not have to come in with any down payment. However, right, because they have additional guidelines around the appraisal, right, or property conditions, they're going to be less likely to accept one of these things. So, for example, sometimes the appraisers are going to require repairs, things like peeling paint, broken windows, roof problems, safety hazards, or even like missing handrails for stairs going downstairs. Right? If
Mhm.
if the house was never built with handrails, you're gonna have to put one in. So things like that, you have to understand that when they look at it, they're gonna look at these different things. They also have, the listing agent who's going to be on their side to kind of guide them through this different process. And then finally, fourth would be, your hard money, your private lending funding. Uh, these are great for investors, right? However, sometimes like there are specific guidelines around them that makes it a little bit more complicated. So if the private money or the hard money is very, very similar to cash, then they'll probably just write it as cash. And if they write it as cash, as long as they can fund it and they can provide the documentation showing that they have the cash and that the lending institution is going to provide the cash, then you're probably pretty good, right? However, there are times where they actually have to underwrite the whole entire transaction, and we have to make sure that things move well. Most of the times, private money, hard money, DSCR loans are used by investors, and they usually require a little bit more money involved. And so, if it's vetted out by a loan officer, it's probably good to go. However, it's non-standard, right? It's non-standard, so sellers don't really understand what it is, and they're going to prefer cash, conventional, or a government loan above that private money type product.
Yeah. So, just to summarize, kind of, so cash is king, right? And
Hmm,
then
hmm.
your conventional, And then the thing with FHA, VA, like any government-backed loan, USDA, um, the property condition, anything that gets flagged, it must be fixed by somebody. It doesn't have to be the seller. The buyer can also choose to fix these things if they really want the
Mhm.
house, right? But you got to understand that the house is not yours yet, right? So you may have to do things like touch up any chip paint before you can close because the appraiser has come back out, verify that the repairs have been done, and then the lenders can be like, okay, looks good, we can fund you the loan, right? So
Mhm.
that's
Mhm.
something very important for you to understand if you're using FHA or any government-backed loan. Um, and then the just another note about private money, hard money. Most of the times, they don't allow this type of lending for a primary residence, right? It has to be
Mhm.
strictly investment property. So most lenders, they're not going to allow you to use that to go buy your own personal home. So, um, moving on, let's talk about some other strategies here to beef up your offer to make it stand out. Um, let's talk about earnest money, right? So, um, most states, I believe, use earnest money. There are some states that don't, which is kind of surprising. But earnest money is essentially, if you're not familiar, if you haven't gone through the home buying process yet, earnest money is a deposit, right? It's like a deposit of like good faith that, hey, if the seller accepts your offer, right, you have certain amount of days, usually 5 days, to send in your earnest money deposit, right? And that gets held by a third party, usually either the seller's brokerage or a escrow company, a title company will hold on to that money, right, until the transaction is completed. Now, some of the common questions is earnest money contributed towards a buyer's down payment? And the answer is yes, right? Um, Now, earnest money is protected, right? So there typically are contingencies around earnest money, such as inspection contingency, appraisal contingency, and finance contingency. So, meaning that if these contingencies are still valid, the timeline hasn't expired yet, a buyer could still exit the deal and still keep their earnest money, right? They still have the right to get that earnest money back, right? Now, let's talk about how can a buyer show that their offer is better than another buyer by earnest money.
Yeah, so here in the Twin Cities, right? Um, so for the earnest money, you can give any amount, a dollar or more, right? You can really give any amount, but it shows how serious and how committed you are to the transaction. Now, on average, you'll see upwards of $1,000, right? Usually, what I recommend my clients on average is 1%. 1% shows people that you're committed and you're serious. However, if you want to beat that, right, you would do like a 2%, right? Let's say it's a $500,000 house, you do a $10,000 earnest money. That shows them how seriously you are willing to make this deal happen, right? That being said, there's a likelihood that you really, really, the sellers are going to be looking at it like the buyers really, really want to buy this. They probably won't nitpick on the inspection because they're doing a $10,000 earnest money deposit. However, if it's only $1,000 on a $500,000 house, sometimes you got to question, like, how come they're not doing at least $5,000, the 1%, right? And so
Mhm.
sellers are going to be looking at it from that perspective. If you're a buyer and you're capable of doing 2% and you're very, very serious about this house and you want the house no matter what, you do the heavier amount, which is the 2%. So that's how we kind of do it here. In the Twin Cities. What do you guys do out there in Milwaukee?
Basically the same as what you just said.
Okay.
The most common is 1%, right?
Mhm.
Um, and like you said, if you get an offer and they do less than 1%, or you as the buyer, you're doing less than 1%, it's going to raise some questions, right? It's going to raise some red
Mhm.
flags,
Mhm.
like is this person financially sound to be buying a house, right?
Mhm. Mhm.
Especially if they're only putting 1,000, like you said, when 1% is about 3,000 or 4,000. Well, it kind of shows to the seller that maybe they're not as serious, and maybe they're just going to walk away, right? Maybe
Yeah.
they're okay with losing this $1,000, right? Well, worst comes to
Mhm.
worst, right? So
Hmm.
usually the more that you can show, the better, right? And that's kind of what I tell my buyers, that hey, if you really like this house, you really want to win, let's show them that you're committed, because at the end of the day, that money's going to go towards the down payment anyways. So,
Hmm.
you know, if you got the money, you got the money. So might as well put it down, right? Um,
Agreed.
and then let's move on to something you talked about a little bit earlier, home inspections, right? So
Hmm.
uh, when we are in the crazy times of competitive bid wars, right? Uh, Buyers are doing certain things that are kind of risky, right? And this includes waiving home inspections, right? Um, I see that quite often, and I don't know, is that something you see as well in your market?
Yeah, I mean, my clients have done it before, right? When you get into a competitive area where like other people are waiving the inspections and the only way for you to win is to waive an inspection, then that's what you do. Of course, like as a realtor, right? I always recommend to get an inspection, right?
Mhm, mhm,
Whether that's like because there's different ways to handle it, right? Because it's dangerous to not do it, because what if there is a massive foundation issue? What if there is like what if your roof is not bolted on correctly, or nailed on correctly? The inspectors will see these things, and the inspectors will be able to point it out so that we can negotiate accordingly. And rightly so, as a buyer, you should be concerned about these things. Like one of the things here in the Twin Cities that I always have my buyers check is the sewer line, right? the, s- there's a likelihood that if the house is over 30 years old, that there's a possibility that it was built with clay and the clay has cracked, right? Roots have gone into it and it's causing clogs. Now, is it possible to just, drill it out? Yeah, but you're going to have to do that almost annually, right? And so it's better to know, right, what you're going to be dealing with if you have issues. Now, I think that there are other options, right? There are some limited inspection, some informational inspections, some pre-inspections, right? Here in the Twin Cities, there's a few cities that require what's called a TISH report, a truth
mhm,
in sale of housing report, which the sellers actually have to do, which is required by the city. And when they do that, it's a pre-inspection. It's something that shows whether there's hazardous issues or not on the house, right? And if you have that, you might not have to do an inspection on your own, right? The buyers may not have to do an inspection because they already have a copy of the TISH report, and the TISH report does cover quite a bit of things, right? Um, a limited inspection would be an inspection where you limit the amount of repairs, or you give them a limit as to when you decide to do repairs. For example, if if the repairs are going to be over $5,000, then you just let them know that you're just going to cancel, right? And so if it's above $5,000, you just cancel. The other way to do it is to say we're not even going to ask for any repairs unless it's over $5,000, right? So if it is over $5,000, we're going to require it. That eases the seller's mind, right? And so there are things that you can do to make the sellers uh, feel a little more secure in the transaction and a little less hassle. Um, there's also informational inspections. So that means that the contract itself is not contingent to the inspection. However, the buyer still wants to do an inspection. And so they can go ahead and go through the process, get the inspection just for informational purposes. Say, for example, they come through, there may be like, $1,000 worth of repairs, just minor stuff. They can just say, no big deal. We're just going to move forward. We're not going to try and negotiate everything. It was just for informational purposes. We got what we needed. We're moving forward.
mhm.
Or it's possible that you might get a deal where the whole entire house is going to collapse, and then you'll know how to handle that afterwards, right? But you at least got the knowledge of it and you know what to do. You might not be able to request the repairs, but you might be able to just have a conversation and take the loss and the earnest money instead of buy a $500,000 house that's just going to fall apart, right? And then so we talked about a little bit about the pre-inspection. If you decide to not do an inspection, I always recommend take 2 hours yourself to run through it before you send the offer in, right? And sometimes you don't have the time, right? Sometimes the offer is due within an hour. And if that happens, you don't really have a choice, right? You just have to make a decision. However, if you do have time, like say for example, the due time is tomorrow at noon, and you have a couple hours tonight, you can run over there. We can run the waters. We can, test out, make sure the water heater is functioning, check the heat, make sure the heat is working, take a look at the roof to make sure there's nothing caving in or anything like that. There's things that you can do when you're looking at a house to kind of alleviate some issues. And if you have a good realtor like myself, you'll have one of those plugins where you can run throughout the whole entire house to make sure every outlet is functional, right? So my thoughts are is that, make sure you have a good realtor who can support you in making sure, if you're gonna decide to waive the inspection, which is not recommended, you do your due diligence and make sure that the house is in the condition that you expect it to be in. You won't be able to check the sewer, right, unless you do an inspection. I think that that's one of the toughest things is you're gonna have to go in sight unseen if you're not gonna do an inspection, right? So just know what you're up against, understand the knowledge, and then make a decision accordingly.
Yeah. So those are some great options there that you've provided. Um, Now, just a note here with the pre-inspection or trying to take a look at what you can as you're walking through the house. Like you
Mhm.
mentioned, there's only so many things that you can do without actually informing the seller that
Yep.
you're going to test, right? Like you can't rip stuff up, you can't
Yep.
rip apart their house because you don't own it. So don't try and go do that. Okay.
Yeah.
Right. You need permission to do certain tests, right? Like radon testing, you need permission. Sewer scope testing, you need permission, right? You can't just be doing whatever you want, right? Okay. So
Mhm.
be
Mhm.
careful. Okay. Um, and then the other note, if you're an investor, right? Typically, most investors don't do inspections, especially if you're a flipper, right? So, depending what you want to do with the house, if you're going to flip the whole house anyways, like complete gut, rehab it all, it's going to all be new anyway. So, you know, it, really, do you need an inspector to tell you, right? So, it's up to you, right? And we as professionals, we never it's a liability for us to say, yeah, skip the inspection. We can never tell you to do that, right? We're never going to say that to you.
Mhm.
So it's your decision, it's your call, right?
Mhm.
Um, I've had other buyers do post closing inspection, right? Just for peace of mind, right? And
Okay.
yeah, I mean that's an option too, right? So,
Mhm.
of
Mhm.
course, at that point, you can't go back after the seller, probably most likely, right? So, um, but it's already yours. But hey, at least the peace of mind, right? Um, so that's an option there too. The next thing we're going to talk about now is appraisal gap coverage, right? So this is a very common term that is put into a very competitive offer when bidding wars are around and everybody's overbidding, right? So you're overbidding past the list price significantly, right? Um, and you know, it doesn't even have to be significantly over list price. It could be the listing agent overpriced the house to begin with, right? And it's not going to appraise
Mhm.
at list
Mhm.
price. So this is where appraisal gap can fix that for the seller, right? And so can you kind of explain what is an appraisal gap and how does a buyer use that?
Yeah, so an appraisal gap is when your purchase price is higher than the actual appraisal value. Say, for example, you offer 310, and that is the purchase price that you're offering, which they, let's say, for example, they accepted it, but the appraisal came in and it came in at 300. You're short $10,000, right? There's a $10,000 difference in there. With that being said, that is going to be your appraisal gap. Now, when you're putting together an offer, you have the ability to put a gap pricing in there. Say, for example, you and your realtor have determined that the value of the home will probably come in at about 300,000. You put in an offer at 310, right? You know the difference is going to be about 10,000, and you put in a $5,000 appraisal gap, right? Or even a $10,000 appraisal gap, depending on where your finances are, right? If you want to win out the bid, sometimes you have to overpay for the house, right? So that being said, if you decide to overpay by 5,000, then when the appraisal comes in at 300, right, you're gonna overpay them by $5,000. The lender is not gonna finance it based on the 310, which is the purchase price. They're gonna finance it on the 300, which it came out to be, which means you're willing to do the difference of additional $5,000 above the appraisal value. So that gives you that cushion. And when you do something like that, it gives the sellers security, right? Meaning that even though you're overbidding and they know you're overbidding, you have an appraisal gap coverage in there so that if you do overbid and the appraisal does come in low, right, you're not just going to negotiate the price down. What you're going to actually do is come in with the difference of about $5,000. That's with the assumption that you decide to do a $5,000 appraisal gap.
Mhm.
If you do the 10,000, you cover the full 10,000, right? So in cases like this, I would recommend you speak to your realtor, right, and get a real good idea of what you think it's going to be, where the appraisal might come in at versus what you're going to be offering. In the past, right, back in the COVID days, back in 2021, when I was involved in a ton of transactions, there was like $50,000 appraisal gaps. I mean,
Mhm.
it,
Yeah.
it was ridiculous how much people were overpaying for some houses. However, in this case, a lot of these people were investors. They were looking to make a significant amount of money on short-term rentals. And so in addition to that, they were writing off depreciation because they had high-paying jobs. If you're in that kind of a situation, talk to your loan officer, talk to your realtor. If it makes sense, talk to your accountant. And if it makes sense, go ahead and move forward. However, right, I don't recommend that just an average person do that, especially in an average market where you're buying your primary, right?
Mhm.
I would say take a look at what's going on in your neighborhood, in your community. If everyone is overpaying and you really, really have to have a house, right? Because the price is only going to continue to go up, then by all means, right, make a decision.
Mhm.
However, if that's not the case, you got to be careful with what you're doing. Uh, you will, like, if you do put an appraisal gap in there, you will be paying above the appraisal if it comes in low, right? So
Mhm.
just understand that.
Yeah, yeah. So I mean, with appraisal gap, it's a big what if game, right?
Mhm,
What if
mhm,
scenario, really. And
mhm,
like you mentioned during COVID, dude, it was crazy. Yeah, you had like 50K appraisal gaps, you had 100K appraisal gaps, depending on what market you're in, right?
mhm.
But at the same time, back then, the rates were like 2%, 3%, right? So it was
Right.
it was like almost free money that you were borrowing to buy a house back then, right? So
Mhm.
at the same time, people were bidding like crazy, right? To
Yeah,
get the house, right?
yeah.
Um, Now, the other thing that you have to realize is that you're not just writing this on a piece of paper and the seller's going to trust you that you have the money. If you decide to exercise appraisal gap, not only do you have to show them your pre-approval letter of your loan, right, that you're good to go on the loan side, you have to show them proof of funds as well, that you have this a gap money in the bank, right, or you have access to it through your 401k or whatever, right? You have to show that you have these funds, right? And so, so then that the seller has to consider that, hey, does the buyer have the funds to do the down payment, closing cost, plus the appraisal gap, right? So a smart listing agent, a smart buyer is going to calculate all that and make sure that you're good, because the what if scenario, uh, you know, um, comes in low, all of a sudden you're gonna be like, oh crap, now I do have to fork out all that money, right? So I like to say that the appraisal gap this strategy is like the sellers, put your money where your mouth is, right? Like, you're gonna
Mm.
offer me that, show me, right? At the same time, when the market is not competitive, right? As a seller, don't always get excited when you see a crazy high offer price, because if the appraisal comes in low and there's no appraisal gap, it's going to get renegotiated, right?
Mhm.
So the seller's not, I mean, the buyer's not going to be willing to pay you 50K over, even though they offered it, doesn't mean they're going to pay you. If there's no gap, they're going to renegotiate. You better believe that, right? And if you don't drop your price to meet their their loan appraised value, there no closing is going to happen, right?
Mhm. Mhm.
So you have to realize that as a seller, right? And that's one of the things as well during the slow times is that sellers are, especially when they're trying to think of their list price, right? They tend to list too high, right? And they forget that the appraiser has to also justify their price, right? And if it doesn't justify, then nobody's buying the house. So,
Mhm. Mhm.
all right. So let's move on to some other creative strategies that buyers can use to potentially win these bidding wars, right? So one of these is a sight unseen offer. Can you kind of explain what that is?
Yeah, so a sight and see offer is an offer that came out online, but no one's had a chance to even go take a look at it, right? Say it just came on the market and you can submit an offer, or like in our market, they have the ability to do coming soon, right?
Mhm. Yep.
So if the coming soon shows up and you like no one's seen it, no one can go see it, right? Until it comes onto the market. That being said, but photos are usually up when you're doing sight unseen. And what that also means that if the realtor is good, right, the listing agent's good, they'll also have diagrams of the house. And so you'll have an idea of how the house is designed, you'll have a how idea of how the house looks, and therefore you can go ahead and make an offer before it goes on the market, right? So there or sometimes right as it goes on the market, you can make an offer as well. By doing that, right? You get an advantage by actually having an offer before anybody else has it. You can put a timeline on it, right? And it can expire if they don't respond back, let's say, for example, within 12 hours, right? Um, so does it work most of the times? Like I've seen, like as a listing agent, right? As a listing agent, when I receive these type of offers, right? Usually it doesn't work. And the reason why is because my clients actually want it on the market to see what everybody's opinion is going to be before before they go ahead and accept one offer, let's say a week before it goes on the market. Like they can wait a week to find out what the market's going to do, right?
Mhm.
So that being said, it doesn't always work, but you never know. Like I've had clients
Never know.
where yeah, you just never know. I've had clients where they're like, "Oh, this is an estate sale. We just want it done." They put in the offer. Let's just do it, right?
Mhm.
Let's just get it done. Like
Yep.
it seems legitimate. It's a cash offer.
Yeah.
Let's just move
Right.
forward, right?
Right. Right.
And so it happens.
Hmm.
Um, I think the
Yeah.
next thing that we had on the list was non-refundable earnest money, right? Or what I call earnest money going hard, meaning when you give the earnest money, you're not getting it back. And you're
Hmm.
telling them that you're willing to risk this money, right? Say, for example, you give the 2%, right? You give $10,000 on a $500,000 house, and you're like, you guys can keep this if the deal doesn't go through. That's very, very attractive to a lot of sellers,
Hmm.
right? Because they know for a fact that no matter what, you're going to go through with this transaction, because if you don't, you're losing $10,000, right?
Yep.
So I think that that's another strategy that's actually pretty good. Um, Seller signing bonus. Laura, I'm gonna have you touch on this because I haven't done this before, and I'm not 100% sure it's allowable in Minnesota.
Mm.
But
Yeah. I mean, I've
yeah,
never done it myself, but I've heard of it from other agents. Essentially, you're just offering the seller bonus money on top of the purchase price, right? So it's not going to be financed into the loan, right? It's actual money that the buyer has, and if you accept their offer, they're just gonna, give it to you. So whether they buy the house or not, it's yours, right?
yep.
So it's like a little bit of incentive, right? So I've heard it works, but I've never personally tried it myself. I've never had any buyers bold enough to give the money away, right? So I mean, all
Yeah.
these strategies are options, right? But
Mhm, mhm,
you as the buyer, you as the investor, you have to be comfortable with doing these things, right?
mhm,
So,
mhm. All right. So the next one is flexible closing date, right? So flexible closing date, I think that if the seller knows when you can close, let's say you give them, you can say anywhere between 2 weeks to 60 days, and they can select the closing date. because it's flexible, you might have an upper hand on the offer in comparison to other offers who needs to close on a specific date, right? So oftentimes when new home buyers come in, they're renting, right? And so they need to be out of their lease and into a house within a certain time period. Now, if you don't have to go through that, right? Let's say you talk to your landlord and they're willing to work out a month to month with you, and you can give it time or you can close faster. That's going to give you a preference. The sellers are going to probably pick you over. Say the deal is exactly the same, but your closing date is more flexible. They're going to go with you over going with someone that doesn't have a flexible date. Another one is rent back to sellers, right? Say, for example, very, very similar to the flexible closing date. Say, for example, you can close, right? And you can close early so they can have the funds. So they can now go do their transaction, right? But you give them a month, right, to stay in the house, and they actually just pay you rent, right? So they pay you rent of about $1,500 for the month. They get to stay in there. It helps them transition to the next house, and that makes it very, very attractive to them because, in all honesty, I've had buyers and sellers sell their house, right, and buy a new house all in the same day, and it's crazy chaotic, right? And so can we do it? Is it possible? Yes, absolutely. However, preferably if they get, maybe a couple weeks and they pay you rent by day or even a whole month, depending on, if they need to be able to purchase that new construction home or whatever the case is. So those are definitely options. Personal letters when allowed, right? From my perspective, here in the Twin Cities, we pretty much like don't do personal letters anymore. We've gone away from that. However, I've seen where someone's like, I have a family of 5. We love your house. It's an amazing house. The letter goes in, and the seller is like, you know, they have an awesome family. They need this house more than anybody else. Sometimes it works, right? But the problem where that lies is if you lie, right? If you commit fraud, it could cause a major issue because if the seller later finds out that you don't have a family and you're a single guy, right? And no one else is living with you and you basically lied, they can come back and they can actually sue you for it. So we've gone away with personal letters. However, I think in some states they still allow it, or in some cases it's still allowed. But just I think for that one, you might want to be a little careful on it.
Yeah. So
Um,
just about that. I mean, sometimes sellers don't care to read them anymore because they can get sued, right? It opens
yeah,
them up to a potential lawsuit, right? So they're just
yeah,
like, no, if there's a letter, I'm not looking at it because if a buyer feels some type of way that they were discriminating against them, right?
mhm,
Whether
mhm,
it's racial or whatever, right? There's fair housing rules, right? If they feel like
mhm,
they've been discriminated against, a buyer could potentially sue the seller, right? And so a lot of
yeah,
sellers are not. They don't even care to read these letters. They're just like, nope, I'm not looking at them.
yeah,
So
yeah, yeah. And then the next one would be an escalation clause, right? So what that means is that you can say our offer is 300,000, right? But we will increase the price in increments of $2,000 up to $310,000, right? So if that gives your buyers a little bit of a leeway to be able to not have to make a maximum offer, right? But instead make an offer where it can possibly beat out all the other offers because there's an escalation clause, meaning if the highest offer comes in at 305, you'll go to 306, and that will allow you to be able to have the highest bid, right? And in those cases, sometimes it works. I've been met up with listing agents where they say we don't accept escalation clause, you guys just need to give us your highest and best, right?
mhm.
And so oftentimes when they do that, then my clients, anyways, the clients that I've had in the past, they just say, well, if that's the case, then we're just going to drop out. um, And so there's been times where we've pulled out actually, because they won't accept an escalation clause. However, if they will, right, then great. It usually works out. You don't have to pay the highest amount, which is the 310 that you're willing to offer, but you can actually pay the lower amount at 306, right? Say another offer came in at 305. So escalation clause are pretty cool. I've used it a few times. Sometimes it works and sometimes it doesn't, right? So it just depends on who you're working with.
Yeah, yeah. So
Um,
same here. Like with escalation clause, I've had situations where listing agents don't like them, or the
mhm,
seller doesn't understand it, right?
mhm.
Or it could be a situation where they simply counter back the they send back a counter
Pull it
offer
out.
of the highest price. They say,
Yep.
"Hey, you said you're willing to go up this high. Well, here, I'm gonna counter offer you that highest price. Take it or
Mhm.
leave it." Right?
Yep. Yep.
So I've done that myself on as the selling agent. I've done it to buyers where, hey, you said you're going to pay that. My seller will take your offer if you're going to pay it, and they, they pretty much just sign it and say, yep, okay.
Yeah.
So
Yeah.
yeah,
Yeah. So sometimes you might as well just, do full price offer. But
yeah,
I
yeah, for
think
sure.
if your clients, right, and this is to realtors, if your clients is strapped for money, right, or if you're the buyer and you're strapped for money, be careful,
Yeah,
with making maximum offers. Make sure you can actually handle it before you jump into it. And if you're going to do an escalation clause, make sure you have the cash to make sure that you can actually make those kind of things happen. Um,
hmm hmm
yep. Anything more on that?
Um, no, I mean that's from the buyer's perspective, right? It
Mhm.
seems like a good idea. It's kind of like the auto bid feature on eBay.
Mhm, mhm.
I haven't used eBay in a while, but I mean, even nowadays, eBay's like, just purchase it, right? The
Yeah, by
purchase
now.
option. Buy it now. Like, okay,
Yeah.
yeah, I'm just gonna buy it now. I'm not gonna go bid it and wait for this auction to end. So yeah, I mean, it's kind of the same way, right? You look at it like that, but you have to understand that from the seller's perspective, if you are giving them the full disclosure of your max, what you're willing to bid, well, that's kind of where the problem is because now you're showing them all your cards. You're like,
Mhm.
hey, I'm willing to pay up to this much. And so in the seller's mind, they're like, dang, well, I want that much. So
Yep. Yep.
yeah. So that's kind of where, yeah, it doesn't quite work as what it's intended. So um
Yep.
yep.
Okay, so the last thing, creative thing is delay financing, right? So there's a few different ways to do delay financing. You can use your 401k, you could find a rich uncle, you could do private lending, or there might even be some lenders out there that are willing to pay for the house in full, knowing that you're going to come back and do a purchase refinance transaction and get financing later, right? So that being said, if you check around, there might be opportunities for you to be able to buy the house. Of course, it always comes with a cost, right? So when you're going to do something like this, if you're going to get financing from somewhere else and then come back and do delayed financing, make sure that you vet it out with your loan officer, that that's something that you can refinance, that's something that you can do a purchase transaction on and get that money back, because sometimes you can't, right? But say for example you can, then go ahead and move forward with it. Like I said, there might be a cost, but that allows you to be able to buy the house almost as cash, right? In the seller's eyes, it is going to be like cash. There's going to be a letter from an investor that has the sufficient funds to be able to just cash it out, right? They'll buy it for you, and then you come back and purchase it from the investor, or you come back and you refinance it out underneath them, right? So whatever the case is, delayed financing is an option. It's used as cash, and so that's something that it's pretty creative. It works in most cases if you're willing to go ahead and pay some of those fees. There's some fees around doing those types of transactions, and so like even if you're going to pull the money from 401k, there's likely going to be some kind of fee involved. And so if you're willing to pay for some of those fees, um, before you can reimburse yourself or the other parties, go ahead and move forward with some delayed financing type programs.
Yeah, yeah. So I mean, if you have the cash in your bank account, that's that's awesome. Just go do it, right? Like
Yep, yep.
buy the property cash first, and then come to one of us loan officers, and we'll refinance you, and we'll get you back your money, right? And then you can just put it right back in
Mhm,
the bank,
mhm.
right? Um, and this is great, especially you know, cash is king, right? So this is great in a very competitive environment, right?
Mhm.
Especially if you're competing against other investors too. So if you have the funds or you have that rich uncle, rich family member you can borrow from, this is fantastic. Now, Johnny did mention that we do have some lenders that do have these types of programs, right? Where technically the lender will buy the house for you and then you
Mhm.
pay them a fee, right? There's a fee involved. It's not free. It's not out of the goodness of their heart. Sorry. So there is a fee, and usually there's some strings attached, right? So especially if you
Mhm.
own a house right now and they know you're gonna sell, there's some strings attached to the house that you currently own, right? So that
Mhm.
they want to
Mhm.
guarantee that they're gonna get paid, right? So
Mhm.
yeah, you gotta be careful. Read the terms and conditions, right?
The fine print.
Right. But it is a great strategy if you have that available, right? So,
Yeah.
let's move on to some of the biggest mistakes that most buyers make during a hot market here.
Yeah, yeah. When the market is crazy hot, right? Don't overanalyze, right? People are making offer. And so if you're hesitating, if you're waiting, if you're overanalyzing, you're thinking about it way too much, and you're not making a decision, you're not making an offer based on what the sellers are wanting, and there's other buyers in the market, you're gonna miss the opportunity, right? And oftentimes people miss a lot of opportunities. Like I've been in a hot market before, and there are people that comes in, they want to test the waters, and they're like, well, we don't want to bid, uh, over this price. And I'm like, well, people are bidding $50,000 over for this house. So if you don't want to jump in, then we should just move on. Otherwise, if you want to buy in this market, that's what you're going to have to do, right? And so trust your agent, trust their recommendation. Usually, if you get an agent that's experienced, right, they'll know what the market is doing, and because they know what the market is doing, they'll be able to provide you with advice for you to be able to win those offers.
Right. So along
But
along with that, man, it's like some buyers are that are new to the process, or there's buyers who are very skeptical, right? They
Mhm,
may not
mhm,
trust their agent, right? And they may not trust information that the agent is giving them about the market, right? So
mhm,
like you just mentioned, hey, there's like 5 offers on this house. Um, what do you want to offer, right? And you give them the comps, right? And you give them the data, and you're like, hey, this house is really worth like 10K more than what they listed it at. And I would recommend we offer this if you're comfortable, right?
mhm,
But in their mind, they're like, well, I'm not either they don't trust you or they don't want to overpay or whatever it might be. They're gonna be like, either they're gonna come in at list price, or they may even go, I'm gonna go $5,000 under list price because
mhm.
they don't know the conditions of the market yet. Like you said, they're testing it.
Yep.
And after they get their
Yep.
butt kicked 2, 3 times, then they start opening
To
their ears.
understand.
Yeah,
Yeah.
and they start listening to what you're saying, and they start like, "Oh, okay, I see what the market's going now," right? And they start trusting you more. I don't know if you ever heard, but sometimes some buyers out there are like, "No, you're just telling me to offer more because you're gonna get paid more as an agent, right? Your
Yeah.
commission can be more." And at the end of the day, I mean, what's an extra $10,000 on the purchase price for us and our commission, right? It's $100, something like that, right? Like, doesn't
Yeah.
matter. So,
Yeah, it's like you're gonna get it back in the gift probably. I don't know. Like
yeah,
there's so many different things that, like that we're gonna provide you advice on. And I think that, if you've selected, like, so say for example, you've selected me, you better have done your due diligence, right? And know what type of agent I am. And you're gonna have to trust me on my recommendations. Um Usually, I'm really, really aware of the market. Usually, I understand exactly what's going on. There are times where the market shifts so fast that nobody can understand it, right? But in most cases, right, we're not just giving you advice to, like, we're here to help you win, right? and we have a fiduciary responsibility to our clients. So we're going to give you all the information that will help you succeed in purchasing a house, especially to buyers, right? And to sellers to sell your house. And the thing is that I've had both buyers and sellers come back to me and say, we should just listen to you, right?
Mhm.
And because eventually what happened was what I told them what would happen.
Yep.
And so they'll come back and they'll be like, man, we should just listen to you because we would have been done like 30 days ago.
Yeah.
And you're like, that's okay. Don't worry about it. We'll it's a learning process. However, right, if you do listen, the likelihood is that if your agent knows what they're doing or their broker knows what they're doing, so your agent can reach out to the broker, you should be fine. You should be in good hands, and you should be able to trust their recommendations, right? If
Mhm.
you don't trust their recommendations, you might want to find a different realtor, right? So
Yeah,
just my 2 cents.
that's a great point, and yeah, I think it's a big matter of trust, right?
Mhm,
And I don't know, sometimes buyers, they want to do their own thing, which sometimes it takes learning lessons, right? You have to
mhm.
fail a couple times before you start listening. Um,
Yeah, that's so
but
true.
yeah, I think that's the biggest thing. Some buyers think that they know how to do our jobs better than we do, right? As the
Mhm,
professionals, we're the ones that are on the streets every day, putting offers every day. We kind of see what's going on, right?
mhm.
And so let's talk about what they can do correctly now.
Yeah, so some of the things that you can do correctly is getting a full pre-approval, meaning send your documents in, get your credit pulled. When I say documents, I mean bank statements, your income documentation, tax returns. Get it over to your loan officer. Get him what he needs to be able to determine what your max pre-approval is going to be and what your comfortable pre-approval is going to be, so that he can go over those numbers with you to make sure that you're ready for that purchase, right? Um, of course, you can get all your financial documentations in place even before you go. We're as loan officers, we're always, or loan officers, or brokers, or mortgage loan originators, we're always going to need 2 months of assets. We're always going to need 30 days of pay stubs, your 2 years of W-2s, right? If you're self-employed, 2 years of tax returns. Those are things that we need. If you currently have a mortgage, we need that information, plus the taxes and insurance on that property. So get your finance documents in order, get it over to your loan officer, and see if they can provide you with a quick decision as to what they can help you with. There are also, some clarities on what you want. What you can do is determine how many bedrooms do you actually want? How many bedrooms do you actually need? You might want 6 bedrooms, but you actually only need 4, right? And there are sometimes houses where you have 4 bedrooms, but there's an office or a den, right? That you can use for your office, or you could use for storage purposes. And you might want that 6 bedroom to do, to use as a closet or something. However, the den will work just fine, right? So your realtor, if they know exactly what you want, they'll be able to support you in that. I had a client that came to me and he was like, I want a catwalk and I want, this type of a house, and I need, 4,500 square feet. And then he named so many things that I was like, I don't think we're going to be able to find that house. Would you like to build it? Right. And he was like, that's not a problem. Let's go ahead and build it. So we're in discovery mode with how he wants his house built out. But the thing is that you do have to be clear on what you want, right? You have to be clear on how many numbers of bedrooms, how many bathrooms do you really need, how much can you handle. Like, we'll look at 5-bedroom homes, but if you only need 4, maybe we should also look at 4-bedroom houses too. And if there happens to be one that you really like, then that'll work out. Same with number of garages or square footage on the house, right? Or if you like 2-story homes versus ramblers versus or cottages, and like they're called different things in different locations, right? Bungalows. Um, do you prefer a 1.5 story? Do you prefer one without a basement, so slab on grade, right?
Mhm.
So get an idea of what it is that you really want, be clear about it, so that your agent can help speed things up and move things quicker. I think you being clear about what it is that you want, in addition to getting that pre-approval all prepped up and ready, that'll move you a lot faster and put you in a much more comfortable position to make offers based on a competitive market, right?
Yeah, definitely. Yeah, don't be so flippy floppy, right, on what you want in a house. I mean, you're gonna tell me one day that you're okay with one bathroom, but then the next day you're like, oh, I really need that one and a half, you
Mhm.
know,
Mhm.
or another
Or all
picky
of a
thing.
sudden want a duplex.
Oh, that too, right? I mean, if you're trying to, you don't know what you're looking for. We don't know what you're looking for, right? It makes our
Right.
job tough, right? Now we're just like, oh, well, what do you want?
Yep.
So, but yeah, the clearer that you have, more clarity on what you want, and your pre-approval is ready to go, and you know what you can kind of sacrifice. Because quite honestly, there is
Mhm.
no perfect property, right? Even if you build a property,
True.
it's not going to be perfect. One day they're like, dang, I wish I should have built it like this, or I wish I'd
Mhm.
had that, right? Um, and I tell people a lot too that we just kind of have to deal with what the market gives us, right? And um, you have to understand what's priority to you, right? And that might be your mortgage payment, because if you can't make the payments, what does it matter, right? So we have to
Mhm.
be
Mhm.
realistic, right? And then from there, you mean location, right? Once you buy that house, you can't move that thing, right? It's going to be very expensive, right? You have all the money in the world, sure, you can move it, but majority of people, you cannot move that house, right? So if it's a
Mhm.
certain location, it has to be the one you like. And then as far as the house itself goes, I mean, I tell people all the time, I mean, if it doesn't quite, it has most of the things, but doesn't have everything. Well, if it has potential to make it how you like it, make it yours, right? I tell them, make it yours, whatever that means. Like remodel the kitchen, remodel the bathroom, right? Do it how you want it, right? So that feels like home for you, right?
Mhm.
That's kind of the best case scenario, especially in a low inventory market that we've been, right? There's not a lot of inventory. Everybody's fighting over the same house, and
Mhm.
people are always like, "Well, we'll just wait and see." Well, and wait for the right one to come in, right? But
Mhm.
everybody else is also waiting, right? Just you think that you're the only one looking for a house like that? There's like 10, 20 other people waiting, looking for the same thing, right?
Mhm.
Um, so it's very tough, right? And people always, it's human emotions, right? Like, but if I take this one, but what if next week the right one comes? Well, you just have to live with it. You have to make the decision. You have to be willing to live with it, right?
Yep.
So yeah, that's basically all the tips that we have to provide for you guys to make the best decision you can and move with confidence, especially during a very competitive market that we're about to embark on. I just got an email literally from the agent that I told you earlier in the podcast that there's like 20 cars lined up. He was like, "Yeah, all offers are due tomorrow by noon." They've got multiple
Mhm.
offers, and they had over 100 showings over the weekend.
That's insane. Yep, get ready. The market
Oh,
is here.
man. Oh, man, that is crazy. So, I'm gonna have to talk to my
Mhm.
buyers and be like, "Hey, do you do you wanna put in an offer?"
Mhm.
So, yeah. Um, so yeah, definitely in a market condition like this, work with your professional, right? Make sure you're hiring the person that you trust and listen to them. Um, it's about strategy, and one of the biggest tips that I can share with buyers who have been successful, buyers who uh you know are a little bit easier to work with, and uh you know what they do is they ask questions, right? So meaning that they'll tell me what they want to offer, and then they'll ask me my opinion because they trust me, right? They'll be like, what do
Mhm.
you think of that? Does that sound competitive? Are we What do you think? Are we going to be good, or do we need to tweak stuff, right? And
Mhm.
so that means that they are not, they're not, they don't feel any type of way if I say, no, that's terrible, right? Um, they're open to criticism, right? They're open to learning about, all right, what else can we do, right? Because they
Mhm.
want to do everything they can to get that house, right? Rather than the type of buyers that go, oh, this is our offer, this is our best offer, or what they think is the best offer, and then they go, well, if it's meant to be, it's meant to be. you know.
Mhm.
So yeah, there's some different ways to go about it, right? And of course, you want to put the best offer you can together. I always tell people, my last advice is that put together the best offer you can so that you don't have any regrets. If
Mhm.
you should lose, right? If
Yeah.
you find out you lose by $1,000, okay, then, don't go talking about it for the next 2-3 years. I have a buyer who's still doing that. Still talks about that house he lost out on. So yeah. Any last words for you?
No, I think get ready for the spring market. It's coming. If you're a buyer out there, go get a pre-approval, right? Call us, right? If you're in the Twin Cities, call me. If you're in Wisconsin, call Lore. I mean, there's a few other states that we do business in. Reach out. Even just having a conversation will lead you in the right direction. So, anything we can help with, we're here to help.
Definitely. So that's it for this podcast. If you got value out of this, you want to share it with other people, help us out, hit that like button, hit the share button, put it in front of your spouse, share these strategies, right? Share it with your realtor. They might learn a thing or two, right?
Mhm.
So we will see you in the next episode. Thanks so much for watching. Don't forget to subscribe if you haven't already. So
Yeah.